Does corporate social responsibility, abbreviated as CSR, increase profitability growth? To give an answer to this question, let's look at some controversies that surround the subject in question. The first on the list is greenwashing. The term greenwashing is the habit of firms making misleading or exaggerated claims about their commitment to social responsibility or environmental sustainability. This is one of the greatest debates that surrounds CSR. According to critics, many companies engage in greenwashing to boost their brand and public image without actually making meaningful operational changes. The next on the list is government regulation function. This implies the role of government to regulate advancement of CSR. This debate has sparked interest in the minds of many individuals. Some argue that businesses ought to be free to pursue CSR initiatives without the interference from the government. Meanwhile, others argue that government regulation is required to guarantee that businesses are held responsible for their deeds and that they should refrain from engaging in practices that harm society or the environment. The next on the list is social justice. There is a growing discussion on how CSR might advance social justice. Critics on this topic claim that CSR initiatives frequently ignore more pressing social and economic issues like income inequality and systemic prejudice, and pay more attention to charity and community service. Corporate accountability and power is the next we have on the list. This debate outlines the role of corporations in the society. Critics argue that businesses have too much influence and power over government, which can result in decisions that favor their interests over those of the entire society. Debatable topics include how corporations should be held accountable for their deeds, like emitting carbon dioxide gases into the ecosystem and polluting the environment while producing goods and services, and to what degree are they to be held accountable. Another debate surrounding CSR is a potential trade-off between corporate social responsibility and profitability. This is our focus in today's discussion. Firstly, some claim that participating in CSR initiatives might have a negative impact on a company's financial success because its implementation demands more resources, such as cash, office space, machinery, free donations to society, and much more. Some say, on the other hand, that CSR initiatives can actually boost a company's reputation, promote consumer loyalty, and recruit brilliant personnel, resulting in enhanced long-term financial performance. So we have covered the various controversies that surround corporate social responsibility. However, the question still stands: does corporate social responsibility actually increase financial performance in companies? To answer this question, let's first of all have a look at some research findings on the topic. The first research findings on the list is conducted by Hesu and Taiso with a research entitled An Integrated Model of Corporate Social Responsibility, Stakeholder Engagement, and Corporate Reputation for Improving Financial Performance of Multinational Enterprise, Journal of Business Research, conducted in the year 2020. They tried to investigate the effect of stakeholder involvement and corporate social responsibility, CSR, on the financial performance of multinational firms. There are 281 international corporations in the sample. Stakeholders' participation was anticipated to increase the positive correlation between CSR and financial performance. The result of the findings demonstrate that CSR improved financial performance, and that this benefit becomes even greater when businesses interact with their stakeholders. The next research finding on the list is conducted by Hosted and Allen in the year 2020 with the title Corporate Social Responsibility in the Multinational Enterprise, Strategic and Institutional Approaches to Sustainable Development, Journal of World Business. They tried to investigate the institutional and strategic methods used by multinational corporations to carry out corporate social responsibility and advance sustainable development. The sample is made up of case studies of 8 international companies. The researchers anticipated that CSR measures, particularly in emerging areas, will boost multinational corporations' financial performance. Nonetheless, the findings demonstrated that by utilizing their institutional knowledge, forming local relationships, and putting forward cutting-edge innovative business strategies, international corporations may generate value through CSR. The next research finding we have on the list today is conducted by Sartori, Capellaro, and Bagnoli in the year 2020 with the title, Does Corporate Social Responsibility, CSR, Affect Financial Performance? The Mediating Role of Innovation, Journal of Business Research. They try to investigate how innovation mediates the link between CSR and financial performance. There are 1,123 Italian manufacturing companies in the sample. Researchers anticipated that CSR will have a favorable effect on innovation, which will then have a favorable effect on financial performance. The findings indicated that innovation fully mediates the link between corporate social responsibility and financial performance. The next research we have on the list is conducted by Liu and Wang in the year 2021, entitled Revisiting the Effect of Corporate Social Responsibility on Financial Performance. New evidence from a non-parametric quantile regression approach, economic modeling. They try to look at the impact of CSR on financial performance at various levels of corporate performance using a non-parametric quantile regression technique. There are 4,682 Chinese listed companies in the sample. The impact of CSR on financial success was predicted to vary across various levels of business performance. The findings demonstrated that the lower end of the performance distribution is where the positive impact of CSR on financial performance is most noticeable. Now let's break this down. The phrase lower range of firm performance levels in the sample refers to the group of enterprises in the sample with relatively poor financial performance. This could indicate that these enterprises had lower profitability, sales or growth rate when compared to the other firms in the sample. The researchers discovered that implementing CSR efforts had a more marked beneficial influence on financial performance for these lower performing enterprises than for organizations with greater levels of financial success. This study has practical implications for businesses seeking to achieve excellent financial success. According to the survey, these companies may be able to improve their financial performance by embracing CSR efforts. They can improve their reputation, strengthen connections with stakeholders, and perhaps gain access to financing by doing so. It is crucial to note, however, that this conclusion does not necessarily apply to all organizations or industries, and the precise nature of the influence of CSR on financial performance may vary based on a range of circumstances. Now, let's answer the question. Does corporate social responsibility actually increase financial performance in companies? In the answer, we examine the short and long-term effect of CSR on businesses and society at large. Let's dive into the answer. First, in the short-term perspective. Yes, it's obvious that companies may incur expenses as a result of implementing CSR efforts. This is because CSR efforts frequently demand a substantial investment and may not immediately result in higher earnings. However, CSR can have a favorable effect on business reputation, which may boost client loyalty and trust, which can thereby translate into higher profitability and sales in the long run. In addition, CSR actions may enhance worker satisfaction and productivity, and by so doing, employees' engagement and motivation to contribute to the success of the firm tend to increase when they perceive that their employer is devoted to social responsibility. This can translate in better performance and higher earnings in the long run. Therefore, adopting CSR activities over time can result in profitability growth that is sustainable. Thank you so much for your time. If you would like to know more about corporate social responsibility, social and governance aspect in the organization, and society, kindly come around on this page and keep yourself posted with the latest update. And if you like to have personal assistance on this topic to boost your financial growth and employee satisfaction, kindly reach out to us. We are willing to offer our help. Nice day.